Good morning, my dear students. This is your accounts lecturer, Akshata. Today, I am going to introduce you all to the syllabus of your PUC second year accountancy. So, let's begin. This is the textbook of part 1. Accountancy part 1 textbook cover pages like this, and it covers not-for-profit organization and partnership accounts. And what are the various contents inside those each chapters are, for example, when you consider part 1, it has 5 chapters. In that, the first chapter is accounting for not-for-profit organization. So, in short, not-for-profit organizations are the organizations which do not run their activities or run their organization with an objective of earning profit. Rather, those organizations are set up to provide service to specific group of public or people or to a public at large. So, the various contents what you are going to study in not-for-profit organization are meaning and characteristics of not-for-profit organization, accounting records of not-for-profit organization, means you should know when we are not doing business for the sake of earning profit, what might be the various accounts to be recorded or why actually they need to maintain the records. They are supposed to maintain receipts and payments account, income and expenditure account, balance sheet, some particular items, as well as they are going to have income and expenditure account based on trial balance. And sometimes few of the organizations do incidental trading activity. Actually, this incidental trading activity this year is not there for syllabus, but still for the sake of knowledge it is going to help you. Like, for example, I'll be running a hospital. Actually, running a hospital is not for the sake of profit, rather to render service to the public. But incidental trading activity means side by side I'll be running even a chemist shop, means medical shop. So what income I'm going to generate out of medical shop is actually my trading activity. So this incidental trading activity concept is introduced in this not-for-profit organization. Coming to the second chapter, accounting for partnership, basic concepts. In the second chapter they are going to deal only with the basic concepts. As we all know, partnership means it is an organization or a business which is run by more than one person. If he starts a business, it is a sole proprietorship. More than one is partnership. So what are the nature of partnership? What is partnership deed? I know you people have already studied about this in your first year business studies, but here we are going to deal with the accounting aspects. So special aspects of partnership accounts, maintenance of capital accounts of partners. Maybe there are 2 or 3 partners, they are supposed to have to maintain their capital accounts, distribution of profit among the partners, what must be the profit sharing ratio, how will they decide upon their profit sharing ratio. So each and every aspect will be dealt here. Guarantee of profit to a partner. So when you are going to ask a person to act as your partner, sometimes you happen to even guarantee him some amount of profit. So past adjustments and the final accounts. As it is a manufacturing or a trading activity, they are supposed to maintain all the accounts to properly understand how much profit they have made for the year. Now coming to the third chapter, that is reconstitution of a partnership firm. In that we are going to study about admission of a partner. When reconstitution happens, it happens when there is a slight change at least in the existing partnership deed. Means suppose in the initial stage, two persons, two friends together have started a partnership. Suppose after 1 year of their business, they wish that their capital is not sufficient, they are in need of some more capital. They ask their another friend to join the business. So the third person, when he is entering the partnership firm, the entire profit sharing ratio and many other aspects are going to change there. So they are going to teach you what happens when a new partner is admitted into a partnership firm. So under this chapter we are going to study modes of reconstitution of a partnership firm, admission of a new partner, new profit sharing ratio. Their old profit sharing ratio will now be changed, and among three the profit has to be shared, not among the two as they were doing before. So new profit sharing ratio has to be found out, sacrificing ratio also has to be found out, and these two persons will have contributed too much towards the goodwill of the business. So even the new partner who is entering the partnership firm has to bring in some portion of amount in the form of goodwill. So adjustment for accumulated profits and losses, revaluation of asset and reassessment of liabilities, adjustment of capitals, change in profit sharing ratio among the existing partners are few of the aspects which you are going to study in the third chapter. When we will deal with the chapters individually, you will get to know in detailed manner. Now coming to the fourth chapter in the part 1 textbook of your accountancy, that is reconstitution of a partnership firm again, but here they are going to deal with retirement or death of a partner. In the third chapter, the name was reconstitution of partnership firm, and under that they were dealing with admission of a new partner. But here in the fourth chapter they are going to deal with retirement. Suppose three friends together are doing partnership firm, and one person for some or the other reason wishes to discontinue as a partner from that firm. This is called as retirement. If he leaves the firm, it is retirement. Suppose if some issues with some problems, if they happen to lose a partner, in case of a death of a partner, again the partnership firm gets reconstituted. Under this we are going to study ascertaining the method amount due to retiring or deceased partner. Here death means death of a partner, that person has died should not be used. So they are going to use the word as deceased partner. So deceased partner is something relating to death of a partner. So new profit sharing ratio among the old partners has to be again among the continuing partners has to be calculated. So gaining ratio, treatment of goodwill, adjustment for revaluation of assets and liabilities, adjustments for accumulated profits and losses, disposal of amount due to retiring partner. When the partner is retiring, how much amount we are supposed to give to him, we are supposed to calculate, and it should be given to him. Adjustment of partner's capital and death of a partner are the basic concepts which are dealt in this chapter number 4. Now coming to the last chapter in the part 1 textbook, that is dissolution of partnership firm. What do you mean by dissolution of partnership firm? When all the partners together decide to discontinue the business which they are doing as of now, is called as dissolution of a partnership. Again, in case of dissolution of partnership, the complete business comes to a standstill. So there they are going to deal with dissolution of partnership, dissolution of a firm. There is a lot of difference between dissolution of partnership and dissolution of a firm. Settlement of accounts, as well as what are the various accounting treatments to be followed. Now, my dear students, this is the front page of your second accountancy textbook, that is part 2, which is going to deal with company accounts and analysis of financial statements. In your business studies chart of PUC first year, you will have studied what is company. So now in this accounts you are going to learn more on what accounts are maintained in the company form of business organizations. So in this again there are 6 chapters. In the first part there were 5 chapters. In the second part there are 6 chapters. Chapter number 1, accounting for share capital. Hope everybody knows what is share capital. Share capital is a smaller unit of a larger capital. So how you are going to account for the money you have collected from the shareholder is going to be dealt here. Features of a company, kinds of company, share capital of a company, nature and classes of shares, issue of shares, accounting treatment, forfeiture of shares. Ultimately, forfeiture of shares is suppose if any of the shareholder fails to pay the installment amount on the shares which he has purchased, those shares will be forfeited and will be reissued. As of now, you may not be understanding the concept, but when we are going to deal in particular, you will understand everything in detail. Now, chapter number 2 of second part is issue and redemption of debentures. Issue means first time when you are issuing, means your shareholders are buying your shares or general public are buying your shares. That is issue, you are issuing the shares, and redemption of issuing the debentures and redemption of debentures. Here what happens, there is lot of difference between share capital and debentures. In the first chapter they are going to deal with share capital, and in the second chapter they are going to deal with the debentures. The basic difference is share capital is the owned capital and debenture capital is the borrowed capital. So in this we are going to study meaning of debentures, distinction between shares and debentures, types of debentures, issue of debentures, oversubscription. What do you mean by oversubscription? What do you mean by under subscription? Still many more aspects are there to be studied. Likewise, issue of debentures for consideration other than cash, issue of debentures as a collateral security, terms of issue of debentures, interest on debentures, writing off discount and loss on issue of debentures, redemption of debentures, redemption by payment in lump sum, redemption by purchase in open market, redemption by conversion, sinking fund method. Don't worry, the contents are more, but still it's the most interesting chapter and it carries lot of weightage as per the aspect of marks. And coming to the chapter number 3, that is financial statements of a company. So this is the most interesting chapter. Financial statements of a company. You will have already learnt few of the accounting aspects, few of the accounts, how to maintain accounts, what are the various accounts to be maintained. For example, in your PUC first year accountancy, you will have already studied trading account, profit and loss account, and the final financial statement, that is the balance sheet, how to be prepared. So it's quite similar and it's going to be very interesting. Meaning of financial statements, nature of financial statements, objectives of financial statements, types of financial statements, forms and contents of income statement, form and content of balance sheet, some particular items, uses and importance of financial statements, limitations of financial statements are the various aspects you are going to study. According to company law, you are supposed to mandatorily maintain few of the accounts, and that too in the specific manner. So that manner you are going to learn here in this chapter. Now coming to the 4th chapter of your part 2 textbook of accounts is analysis of financial statements. Meaning of financial statement. What are the various financial statements? I can understand that you people can easily prepare trading account, profit and loss account, and the balance sheet, or few of the accounts relating to the companies or any form of business organization. But can you judge whether really they are earning profit, whether the assets are sufficient to meet out the liabilities, whether the cash inflow and cash outflow is good? You can't as of now judge. So you are supposed to study this chapter. That is, the contents included here are meaning of financial analysis, significance of financial analysis, objectives of financial analysis, tools of financial analysis. This is very important. Comparative statements, common sense statements, these two are very, very, very interesting. You will really enjoy a lot in solving the problems. Trend analysis as well as limitations of financial analysis. What financial statements you have prepared, you are supposed to be in a position to judge those financial statements or retrieve or come to a conclusion by seeing those financial statements. Until and unless you know the various tools, you will not be in a position to understand the actual financial position of a business. So you are supposed to know this. Now coming to the last but one, that is the 5th chapter of your part 2 accountancy textbook is accounting ratios. In that you are going to study meaning of accounting ratios, objectives of accounting ratios, advantages of ratio analysis, limitations of ratio analysis, types of ratios, liquidity ratio, solvency ratio, activity ratio, profitability ratios. So these ratios will help you to understand what should be the ratio between your asset and liability, and as such how to maintain it in the business for proper for easily earning enough of profits. So ratio analysis help you identify the various aspects of your financial statements. So the last chapter is cash flow statement. In this you are going to study nature of cash flow statement, benefits of cash flow statements, cash and cash equivalents, cash flows. There will be cash inflow as well as cash outflow, classification of activities for the preparation of cash flow statements, ascertaining cash flow from operating activities, ascertainment of cash flow from investing and financing activity, and last is the preparation of cash flow statement. So again, this chapter is also equally important. And my dear students, at last what I am going to tell you is, studies is an enjoyment if you understand and like it. To understand it, you need to pay a little bit of attention. So all the best, and remember, in your accountancy part 1 textbook you have 5 chapters to study, and in your accountancy part 2 textbook you have 6 chapters to study, and I am here to guide you in each and every aspect. Nothing to worry. So with this much of brief introduction about your accounting syllabus, I am going to start your first chapter of part 1 textbook in the coming classes. Thank you.